My name is Keon. I'm a Senior Research Analyst with Lipper. I'm here to speak to you about the fund flows activity for the week ended Wednesday, October 31st. We'll start this week's report by taking a quick look at the market activity for the week. Both the Dow Jones Industrial Average and the S&P 500 Index recorded gains on the week. The Dow was up 2.2%, while the S&P was up 2.1%. Kind of a bounce back week for each of the indices, as October has been a rough month for both. The S&P was down 6.9% for the month. It's its worst month since September of 2011, and the Dow closed down 5.1% for the month. There were several factors that hampered the markets during the month of October, with one of the main ones being a slowdown in growth for the tech sector, which had been carrying the markets for much of the year. Both indices bounced back this week on some positive earnings reports from GE, Microsoft, and Facebook, as well as investors buying the tech sector on the dip. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at the activity in this for the macro group for the week. Equity funds had net outflows of $7.9 billion for the week. Taxable bond funds also had net outflows, a sizable amount, about $8.3 billion. Muni bond funds saw $1.4 billion leave their coffers, and money market funds took in just short of $200 million for the week, about $176 million. We'll turn our attention, take a closer look, a more granular look at each one of the macro groups now. Starting off with the equity fund groups, as we just mentioned, equity mutual funds saw $7.9 billion leave their coffers. It was their 19th straight week of net outflows. This week we saw domestic equity funds had $4.7 billion leave. It was their 24th straight week of net outflows, and non-domestic equity funds also contributed to the outflows this week. They had $3.2 billion leave their coffers, which was their 6th straight week of net outflows. We'll move on now, look at our equity ETF group. This group had net inflows last week, took in about $10.3 billion in net new money. The largest inflows amongst individual ETFs belong to the SPDR S&P 500 and the iShares Core S&P 500, each took in right around $2.9 billion in net new money. And on the flip side of that, the iShares Russell 1000 ETF had the largest net outflow. They had about $346 million leave. We'll move on now. I'll start looking at our taxable bond group, starting with the mutual funds, taxable bond mutual funds. As we mentioned earlier, they had net outflows last week, a fairly sizable amount. They had $8.3 billion leave their coffers. This was driven by some below investment grade debt categories. High yield bond funds saw $1.2 billion leave, and loan participation funds had net outflows of roughly $960 million for the week. We'll take a look at our taxable bond ETF group now. Net inflows here last week, about $792 million in net new money came into the group. This was paced by the SPDR Bloomberg Barclays 1 to 3 month T-bill ETF, which had net inflows right around $1 billion. This was followed by the iShares Short Treasury Bond ETF, which took in $486 million in net new money. And on the flip side of that, the Invesco Senior Loan ETF product had net outflows of right around $460 million. We'll move on to our municipal bond group now. A big net outflows last week for this group as well. They saw $1.4 billion leave their coffers. Once again, we see the high yield muni debt group had net outflows of $450 million, followed by intermediate muni debt, saw $445 million leave their coffers. The last group to take a look at this week is money market funds. While the overall net inflows were somewhat muted, they only took in $176 million in net new money. Within the peer groups in money markets, there was a lot of activity, a lot of volatility. We saw the money market instrument fund group had net inflows of just over $40 billion. This was followed by the institutional money market group, which took in $39 billion. And this was offset by large outflows from other groups. We saw the institutional U.S. government money market fund group had just over $51 billion in net outflows, and that was followed by the institutional U.S. Treasury money market group, which had net outflows right around $15 billion. Well, that wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website. It's www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about the week's fund flows activity.